Good morning, everyone. Welcome to the On Time, On Target Morning Brief for Invested Fighter Product Precision on a daily basis. And welcome to Monday, October 18th. Again, 2.5 months left to, 2.5 months left to go in the year. I was at Dillard's the other day and saw that they already have the Christmas stuff out. So the year is clipping right along, and soon it will be 2022, which is kind of crazy. Today, we're going to talk about the Apple event that's going on today. It is rumored, again, a lot of these times are secretive. These things are secretive, but certain insiders tend to leak out information. And I kind of think that Apple probably leaks just enough to tease the proper themes out, or if they hear the wrong themes being teased out, they'll get in front of it by leaking a little bit. I can't prove that, but that's largely the thought process there. So they get the right narrative out and they get everybody excited. Expecting a couple new MacBooks out there today. Traditionally, MacBooks have been that 13 to 15 inch range. Now it's 14 to 16, so slightly bigger, slightly fancier chip out there. It's rumored that everybody thought it was going to be the M2 chip. The last one was the M1 chip. It could be the M1 Plus or M1 Pro is now being argued what the chip is called. But regardless, it's going to be faster, better, all of that stuff that they tend to do with each upgrade. So I'm excited to see what the latest things are in the MacBook world. There's also rumors that potentially the AirPod 3, which I didn't realize we were actually at an AirPod 3, but I guess there's AirPods Pro, which were the noise canceling ones, which I have, which are pretty amazing if you don't have them. AirPods 3 maybe is being released today. Don't know. And then, of course, there's some talk about there was a satellite phone capability that was supposed to go into the iPhone 13, which they didn't say anything about. So, but those are all rumors. So we shall see. Again, the Apple event, you can go to just apple.com and watch it live online. You can stream it if you so choose. Again, it is at 10 a.m. Pacific time, so noon here for those of us in Central time. All right. We're also going to talk for our topic of the day. We're going to talk about marginal versus effective tax rates. Marginal, again, is the published chart. You can primarily, 10%, 12%, 20%, 22% with your filing status and your income levels. Remember, that's what you pay on the next dollar, right? So the first group of your dollars is taxed at 10%, then the next group is taxed at 12%, which a little bit, folks are freaking out about tripping the next tax bracket. Well, just if you do, only those next dollars are taxed at that higher level. Which you don't want, but you don't have. It's not the whole pie being taxed at at the new level, right? And a lot of people don't necessarily understand that, and that's okay. But it's something certainly to really kind of know how that works. Now, what's really important, not really important, but it's really more telling, I should say, is your effective tax rate, which you don't know unless you use software, because you could calculate it technically, but who's going to? But if you use like TurboTax, H&R Block, any of those, when you go to file, it will now tell you your effective tax rate, which is really, a lot more useful information, right? It's, I paid this much in taxes and I made this much and I paid this much in taxes. You do the math and then you get your effective tax rate. So that's really what you're paying for the totality of your income, which is a little more interesting than, the marginal tax rate that's out there. All right, for the longs and shorts today, we do have a couple longs. It's Monday, so low volume, don't have huge expectations for trading today, but Albertsons crushed earnings. I want to say they raised their dividend to 12 cents from 10 cents, so a small raise there, or they announced the raise. So we have Albertsons, and then we have LPCN. Has a new licensing agreement. I read it like 3 times. I still can't understand it. Maybe that's the Monday morning brain, but I can't really figure out the story behind it. But there is one, and people are excited about it. So that's on the move up. Our short for today is Zillow, ticker symbol Z. They said they've announced, it's kind of a weird headline, so I can see why the stock's selling off. That they have a backlog of renovations and operational capacity to start selling any new homes on Zillow till the end of the year, which is a long time. Right, 2.5 months are not going to sell any new homes. Kind of curious. I thought the business model for Zillow was it was more of a marketplace. You have the agents paying to be on there. You have people going on there and then finding agents that way. So really, the act of Zillow itself buying and selling houses is I don't fully understand it, is what I'm saying. And I certainly don't understand the renovation piece and how Zillow plays into that. But if you're going to stop new business for 2.5 months, yeah, that stock's going to crater. So that's That's our short for this morning. It's sitting down at $87, and I think it's got a lot more further to fall, if you will. All right, that's what we have for today's show. So thank you so much for checking in. If you're catching us on replay, make sure you subscribe, hit the notifications bell. If you want to join us live, $25 to come on in the room and hang with us. With that, let's go ahead and get started. All right, welcome back, everyone. Here's the lineup card for today. Again, Monday, October 18th. Standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence for acting upon anything you hear in the show. Full disclaimer information is available at OTOTnow.com. All right, mission objectives: grow our money, protect our money, and live off our money. To Apple event today. Is Apple a good stock? Yeah, it's number one in the book. It's been number one in the book for the past 7 years. I don't see it being unseated anytime soon. When we do pull the chart, though, this year Apple has pretty much underperformed. So, for those that, measure in, whether you measure your return in quarters, years, or decades, if you do hold stocks for a long time, there is a time, no matter somewhere along the roller coaster, where that stock is going to underperform. If you're in a hedge fund, you dump those stocks and you buy the next ones, and you're always guessing and trying to figure out the exact highest performance. If you're investing for your lifelong goals and wealth building and financial independence, generally you just hold on to the best of breed stocks that you can find out there and let them do their thing. So you don't try to game what is 2021 going to be a year of underperformance or outperformance of Apple. You don't care. Apple's one of the best companies in the world. So let's buy a piece of that and become a shareholder and hold on to it for as long as we can, right? So for our Apple event today, is it going to move the stock? Generally, they do not honestly move the stock. They are exciting. There's a lot of PR, obviously, but it generally, if anything, the stock will sell off if the announcement isn't something exciting. So really not much chance of Apple screaming higher after they say, hey, here's our new MacBook. But if it was, crazy or missed the mark as far as expectations, I should say, then it could have a chance to sell the stock off. So not really a tradable event. If anything, you might get a better long-term entry point. All right, question today, marginal versus effective. We'll talk about that after the open. Again, flow, long, short, open, short, long. We'll take a look at the Apple chart. Contingencies and academic resources are standard. All right, let's go ahead and take a look at TD Ameritrade Think Pipes. This is kind of where we've been. Let's zoom out. So, we did have some rough couple weeks there, right? And we bounced significantly in the past couple of days. So up big, nice big green move here. It keeps us in our uptrend, which is kind of crazy, right? I thought that was going to break. It's not going to break, at least not right now. So we shall see. But overall, nice little bottom here, and then we're marching back higher. Here's how we'll be set up for our day trading. Again, ACI long, LPCN long, and then Zillow short. You can see the big fall in Zillow there. All right, let's go over to CNBC.com. Take a look at the futures, which are in the red, about 0.5% across the board. So here's the numbers for this morning. No change from last time I looked a little bit ago. So holding pretty steady at about 0.5% down. Europe in the red across the board, almost 1%, so more significant than here in the U.S. Asia is mixed and light. 10-year bonds up over 1.6. Again, we saw 1.8 not too long ago, so I think they're just slowly starting to creep higher there. Oil still well outside of its normal range, a lot higher. People ask about investing in oil stocks here. I think the money's been made. They do have nice dividends, but I don't think it's the future. It's not something I would want to hold for a significant amount of time. All right, gold and silver selling off a little bit, and then crypto, you see Bitcoin's over 60,000. I did the show Friday on the Bitcoin futures ETFs, which are supposed to start tomorrow, unless they get trumped by the SEC today. So we'll see. Stay tuned. We'll probably be talking about those again tomorrow, since they're the most interesting thing that's going on, if they're allowed to proceed. But again, I laid the groundwork for it, on Friday. Okay, let's take a look at the headlines here. Colin Powell passed away. That's unfortunate. He was largely the most respected person in the military when I was in. Really did a fantastic job of leading the military and then on into politics without being too much of a politician. But and definitely involved. Obviously, if you remember the Iraq and shock and awe and all that, he was Secretary of State at the time. All right. Here's your Bitcoin futures ETFs making their debut tomorrow. Again, if they don't get trumped. Disney's saying, Disney's getting downgraded. They teased out getting rid of ESPN, which has always been a big drag on Disney. So I thought the shares would go higher, but they're not, and they got a big downgrade this morning. But they do say that Disney Plus plans to be bigger than Netflix. So they're really leaning hard into the streaming content. Speaking of Netflix, here's you have your Squid Game valued at almost $900 million. Kind of crazy. All right, let's take a look at the Apple chart here as promised. So here you have a 9-month look. Again, it was down here in the 120 range not too long ago, 6 months ago or so. Kind of a steady move higher, and then it sold off recently. So when you think of entry points, not a bad entry point. People are saying Apple's cheap right now. Well, it is, but it's also moved, a lot. It's cheap because of price to earnings ratio. So you have your standard PE ratios here. Remember, Tesla is up at like 700. The standard market is anywhere from, it used to be around that 18 to 20. Now it's more like 25 is kind of the fair market value as far as the entirety of the market, if you will. You do get a little bit of dividend if you're an Apple shareholder. It's not enough to necessarily get their products for free. I guess if you had enough shares, it would be, but not quite for me. But a lot of green numbers over here. Certainly their margins are huge. It's a luxury product. People will pay whatever they ask. So good place to have your money, and nobody really betting against Apple that is sane anyway. So, all right, that's what we take a look at. Again, you can read stuff till the end of time here. There's always articles out every day about, especially about what's going on with the big Apple Live event, MacBook Pro, and other new things on the way today. All right, let's go over to TD Ameritrade, and I'll be right back with you to set up for the open. Good morning, everyone. Welcome to the On Time On Target play of the day. Here's the opening bell. There it is. All right, for October 18th, Monday, you have 4 screens in front of you. This S&P 500 futures, we're down 0.5%. There is some positivity going into the open here. That's about 20 minutes worth of market moving higher. So we'll focus in on that a little bit just to kind of see which way the market's leaning. You have 2 longs. Well, this used to be a long. Look at the sell-off in Albertsons. Actually, let's back that out. That's kind of instructive. This is supposed to be a long, right? And look how far it's come down. So you could turn around and take this back long here. It doesn't really fit our criteria, but it's certainly interesting how much it sold off in the 1 minute before the market opened. All right, so we have Albertsons long, and then we have LPCN. Again, the storyline is a new licensing agreement. And then the short out there is Zillow, which I think is the most attractive of the investments this morning. Is trying to turn around and take Zillow short 87. So you'd need at least a 50-cent stop. It's hard to cover this high of the day because it's so far up there, but it certainly is in the heart of the window here. This is tempting to take kind of a quick target here on Albertsons. It does not fit our model, so I'm a little leery to break from the model, so I won't. So why would I do that? But certainly that is positioned to go higher. If you want to take a look at it, you have to do it on your own. Set a 30-cent stop or so. You're not going to be able to cover the low of the day. It doesn't meet the numbers, but I do think it is positioned to go higher unless there was something that really just came out right 1 minute before the market opened that caused that $1 per share sell-off. All right. Into Zillow this morning. Can we get into this? 50-cent stop would be, we'd have to put it 87.30. There's no way you'd cover all the way to the high. So it'd be 86.80 would be the entry point for the 50-cent stop. There it is, 86.80. Let's go in with that. and covering up again at 87.30. Pretty aggressive. Don't take it if you don't want it, but 86.30 is the next one. Now it's falling off the cliff. 86.30 is your 1R. We're already there. And 85.30 is your exit point. Get the number 2 thrown in there, and then yeah, your exit point's down at what did I say? 85.30. So in at 86. Excuse me. 86.8. Still take it right here. Again, this is short for Zillow and their operational constraints and no new sales between now and the end of the year. So pretty good theme there. We're protected against just losing that 1R point at 87.30. It is backing up here. So if we hit that, you got to be out, and we're out. Excuse me. So red X of shame there, already back out of the Zillow. I wouldn't trade this all day, but this certainly has a lot of momentum to go to continue down south. You can see it already went, we were basically up an hour and a half within just a few seconds, and then it turned around and flipped, but a lot of momentum to the downside. All right, let's take a look at our charts. Excuse me, let's take a look at the long-term plays for today, kind of switching into long-term. Some things are up. Roblox is up, Tesla up, Facebook up, kind of surprisingly, with all the negativity in the news out there. DraftKings had a major announcement. Didn't quite understand it, so I didn't report on it this morning, but it's in play a little bit for a big sponsorship it has. Blackstone, Neo, CRISPR Therapeutics, a lot of the popular names, Palantir. All right, let's take a look at the downside, see what's leading me. There's a spec up top, Empower, some options, some more speculative stuff. Disney off 2% off of that downgrade. Qualcomm, Sony, Comcast, Dominion, MasterCard, Raytheon, Newmont Mining. All right, Mind Medicine off, Apple off 1% going into today's event. So we'll keep an eye on Apple. All right. Let's switch out of this mode into, let's go back over to talk tax rates. All right. Again, nothing out as far as I know, as far as the 2022 tax rates. I think we're waiting for tax reform. Sitting here in the middle of October, I don't think there's really a chance of the tax reform passing in current year period. I don't think it'll pass before the end of the year. And certainly if it does, we're getting to that point where it's not going to make the 2022 tax code. And people, are always say, well, they're going to make it retroactive or effective immediately. And it's just like, really? That's very difficult to do. Trump did that with the 2017 Tax Cut and Jobs Act. And it really, even TurboTax was just saying, don't do your taxes in January, because they were still digesting everything that was coming in, because they want to get it right, obviously. So, and they, if you use TurboTax, every time you log in, there's a new patch, right, of new updates coming in. So it was I just don't think it's going to happen for 2022. So what does that really mean to you? Is I get asked every day, should I be converting everything to my Roth this year, paying lower taxes now than I will in the future? And I would should I sell all my holdings that have long-term capital gains because they're tax favored right now and they're not going to be in the future? I think you're guessing a little too much. I really do. I think the only no-brainer stuff that's in the tax reform is the corporate tax rates moving up from 20 to probably 25. I don't know, maybe 26 or 27. Not going to argue that, but it's definitely moving higher, and it probably should, to be honest. And I own a business, so yeah, probably should pay more than 20%. No problem with that. And of course, the tax reform for those making $400,000 and above in income, I think that's going to fly through, whether it should or shouldn't. I think that's just an easy target, and you can pass it. It makes everybody happy. Tax the rich, right? So those two things I think are just a given. As far as messing with either the step up in basis for the estate tax or lowering the estate tax, I think those are hot button issues that people don't want to tackle. I think the Roth conversions are, and the whole idea of the Roth and will it get done away with? I think in our lifetime, yes, I think the Roth has to go away, just because it's such a good deal. But whatever you have in it's going to be grandfathered. I think there's going to be plenty of time to be able to make the conversion. It's not just going to get passed on a Tuesday and on Wednesday morning you can't do it anymore. Things just don't work like that. So anticipate being very busy when tax reform comes out, because certainly some people will be affected and will need to make some moves. But largely, I don't think it's going to be the draconian tax reform that we expected. That was highly likely, I guess, going into a blue wave type of scenario where a lot of folks ran on, increasing taxes on the rich, right? So, so we shall see. But things are going kind of glacially slow in politics. With the debt ceiling, infrastructure, maybe this is normal. It just seems like things are not passing right now as quickly as they could be, but that could be my interpretation of it. Okay, marginal tax rate, it's what you pay on the additional dollar of income. That's, again, the concept that isn't widely understood. But again, if you make $100,000, your first $10,000 are taxed at the lowest rate, and then it steps up incrementally from there. Progressive taxation. 7 tax brackets out there. That may change. They may have a new one, but right now the highest for 2021 is 39.6%. Excuse me, that was the previous one. Now we're at 37%. Do I think it goes above 40? Yes. I don't think it goes above 50 though, because then you get into the really I'm going to work for less than half of the dollar I make. Yeah, that's a tough sell. There's always flat tax people out there. I think you could probably, I like that myself. I think the tax form should be 1 page front and back. If you can't get it done, then it's too complex. But that's why we have I've commonly said the tax code is something that would be better off if somebody went, oops, I accidentally deleted it. Let's start over. But unfortunately it exists. It's too much of an animal. And when you have something that complex and you try to make iterative changes to it, it gets very confusing. If we took the whole thing and we threw it out and we started over with a blank sheet of paper and we had 1 week to come up with a new tax code, how complex could you make it? I guess I shouldn't challenge people with that. But if you said you get 1 page front and back for the tax form and maybe no more than 50 pages for the instruction manual, well, that would certainly simplify it. But then again, you'd lose all those IRS jobs. Right. Here's your marginal taxes. Here's all the rates. These are accurate as of 2021. And again, when you talk about that 400,000, it's really kind of living right here, if you will. It kind of assumes you're married. And then these tax rates above 37%. I mean, that's pretty significant income if you're up in this range. But it's, where's the big jump? It's really right here from 24 to 32. Right, there's another jump down in here, but again, if you're married and in professions, you're probably above this. But the next big jump is really when you take pretty significant increase in pay from 330,000 all the way up to or from 172 up to that cracking into the 330 range, and then just incrementally above there a couple percent. A couple percent on a lot bigger numbers, that's for sure. So here's how the calculations, it tells you that if a single taxpayer earned 150,000, their first 9,950 is free, is at 10%. So that's 995. And then here's your next dollars at 12%, your next dollars at 22, your next dollars at 24, and then you don't have anything above that. So then you add these up, and then that is what you have for a tax liability. And then your effective tax rate is you go back into, okay, well, I paid 30 and I made 150. So that's a 20% effective tax rate. So obviously your effective tax rate is going to be in here somewhere. So, all right, that is all I'm going to talk about for today. So thank you so much for checking in. We'll see you back tomorrow. Have a good one.